Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what is happening and what we can expect moving forward into next week. So as usual, if you enjoyed, don't forget to hit that like button, it does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested, where I share my intraday thoughts, posts, updates, flow on Tesla and all that kind of stuff, options flow, of course, and all that kind of stuff throughout the day, just for $2.99 a month. The link is in the description. But nonetheless, jumping right into it, Tesla closing the day somehow in the green. Obviously, it's a red candle because we did close below the open, unfortunately. But nonetheless, still closing in the green, which on a day like this is not a bad day to close in the green after such a massive sell-off yesterday post-earnings. And on a day where the market, for at least QQQ, is down 0.7%, right? So that's not bad. Tesla with a pretty rare outperformance on the market today with that nice little 0.3 in the green, which at this point, honestly, beggars can't be choosers, right? Let's be honest here. Now, let's talk about Tesla. Let's just talk about what is happening. Now, the first thing I want to really get into pretty deep, not deep, I guess, but something I really want to get into is going to be options flow. The reason I want to get into options flow is for two reasons. First and foremost, I'm not, at least until just literally a few minutes before the market closed, but overall, I wasn't seeing a lot of massive whales come in with just straight up massive call options. There are, of course, some, don't get me wrong, but nothing like just that really made me go like, holy shit, right? For the most part, the majority of whales were doing things like this right here, where you can see it's a put, bid, sell. Well, 1.2 million, 1.2 million, 175 strike for, September 20th, right? So essentially what I'm seeing a lot right now is a lot of these kind of, open, sell to open puts, which is bullish. Don't get me wrong, that is bullish, but it's not bullish in the sense that makes me think Tesla's going to fly on Monday, for instance, right? Because this just means that most likely we're setting up a base around this 180, maybe even like, just into the 170s level. However, just before the market closed, pretty much like 3 minutes before the market closed, this massive order came in. It's above the ask, which is really important to understand. The reason, if it's above the ask, that means there's urgency. There's a sense of urgency. That means that they were willing to pay extra, essentially, to really get into this trade like right now. Like, no, they don't want to waste any time. They don't want to they want to get in this trade before the market closed. Pretty much at the end of the day, no questions asked. They want in on this trade. 5.7 million in premium. So this is obviously a whale, unless 5.7 million is not considered a lot to some people. Again, above the ask, which is good. It is a call. This is a straight up call. 300 strike on this call, which is very, very far away. That's very much out of the money, right? That's like almost a double from here, right? Obviously, it's not exactly a double, but it's not that far from being almost a double from here. Now, the one thing to note is the fact that it is a leap, right? It is for June 18th, 2026. So it is like almost 2.5 years out, right? Just under 2.5 years out, roughly. So take that into account, right? It isn't something that's short term. But when they're putting up this much money on a trade for this far out, like if this was a low strike, like let's say maybe like a 200 strike, okay, then maybe it's like not a huge, it's still good, but not a huge deal. But the fact that this is 300 strike, I think maybe that's why they have a leap, is to really just buy them sometime just in case, right? Especially when you're playing with this kind of money, at least. Again, we don't know the true intentions behind this, of course, but if I had to guess, that's kind of what I would assume. So take that into consideration. That's pretty damn good, right? That's a massive whale coming in, almost 6 million in premium. So that's nice to see. Now, looking at the technicals, like I said, first and foremost, Tesla with an outperformance towards the market today, which on a day like this, especially after a sell-off yesterday, is very welcomed. I'm very happy about that. That is nice to see. The main thing I'll be looking at is pretty simple. There's two things. First and foremost, three things really. First and foremost, I said this many times and will continue saying it until it's no longer the case. Tesla is substantially oversold. I'm not going to go into it as much as I used to because I'm sure you all get the idea. We've talked about this many times, but essentially it's pretty much the most oversold that has ever been, arguably more oversold than back when Elon was selling and we were at $100 per share. Obviously, RSI is just one factor. It's not enough to just be the only reason Tesla bounces, but if you just look at historical trends, Tesla has bounced whenever the RSI has been oversold. Not instantly, but it has bounced, and RSI has at some point, it will at some point retrace back over to the middle, right? Ish, give or take. Not necessarily back to like 50 exactly, but at least somewhere back within the regular realm, if you will. So keep that in mind. And I do think that will happen. And I do think that is going to be what takes us also around the low 200s, which we'll talk about pretty soon as well. MACD is substantially oversold, right? Stochastic is just pretty much scraping the bottom of the barrel. If I can find it over here, I was kind of hidden. Pretty much scraping the bottom of the barrel, right? Definitely some, work to be done there. The Williams percent pretty much scraping the bottom of the barrel. Like, we're just extremely oversold on so many metrics, but I'm not going to get too much more into it because we've talked about it so many darn times. The next things I want to talk about are trend lines. Let's talk about trend lines. So first and foremost, going over the weekly, right? Something else to talk about here as well. We'll get that in soon. But, trend lines, we did break below trend lines. We did break below this trend line up here. We broke below the yellow one as well. That's not good. The next thing I'll be looking for is simply a retest of them, which will pretty much bring us into the low 200s, right? That is going to be the next thing I'll be looking for. But the RSI on the weekly has also ever so slightly entered the oversold territory as well, which rarely happens. Keep that in mind. This is like a truly rare occurrence. It's not often that the RSI on the weekly time frame enters. It's not like super oversold, but it's there. It's peeking its head into that oversold territory. It is arguably in oversold territory right now. Also, very rare that this happens, as you can see in the past, right? The last time it's actually happened was when pretty much Elon was selling, and before that, it was all the way back in 2019. It doesn't happen very often. So, take that into account as well. Now, the next thing to talk about is, of course, going to be the weekly candles, right? The weekly candles themselves. So first and foremost, you can see we've had a lot of red weekly candles in a row. 1, 2, 3, 4, 5, 6 weekly candles in a row. Now, I saw some people that I follow that, are good traders, don't get me wrong, have posted about how Tesla has had 6 weekly candles in a row before, which I'm not sure how their chart is showing that. My chart isn't showing that. And I looked at TradingView as well. It's not showing any 6 other red week. I can't even find 5, let alone 6. But his name is Jake. I'm sure some of you follow him on Twitter or X, whatever. He said that there's been 2 other times where Tesla has had 6 red weekly candles in a row. I can't find them. And I've looked at the ones he's looked. For instance, this is one of his examples. For some reason, this candle for him is red. And I think there was one other one that was, I think it was this one. 1, 2, 3, 4, 5. Yeah, this candle right here for him is red on his chart. And I have no idea why. But the point I'm trying to make here is the fact that whenever Tesla has this many red weekly candles in a row, it is imminent to get a green or white, green, whatever, weekly candle, potentially even as early as next week. It really wouldn't shock me. And I think latest the week after that, mainly because you can't just keep going down forever, right? This isn't AMC. This isn't, like a shit stock like that, like a literal meme stock. Some people I know view Tesla as a meme stock, but it's not a literal meme stock. This is a company that actually has cash, that actually has from what I understand, a very healthy balance sheet, right? There is actual substance behind the numbers, right? As opposed to something like AMC where, well, there's really no substance at all, just as an example, right? Which is why that one can continue selling off, because there's nothing to support it, literally. Anyway, that's aside from the point. The point is the fact that we are entering some pretty historic moments here, again, with the oversold territory on the daily chart, with this many red weekly candles, which I have never seen this many red weekly candles on Tesla ever. And I've looked back pretty far. And I think the farthest one is this one. This is the most recent one I can find, which is going to be all the way back here. 1, 2, 3, 4, 5, 6. This is 7. This was 7 red weekly candles back in 2019. And I can't find anything more than that, right? That is by far so we're making history here, like unironically. So that's pretty interesting to note. And again, I expect a bounce pretty soon. Now, the question, of course, is, well, okay, let's say we do bounce. Where do we bounce to? How high do we go? Simplest thing to do is take the Fibonacci. This is most likely going to be a dead cat bounce, so this applies here. And you can just look at the Fibonacci levels, right? First level will be 200, then 212, then 222, and then 232. These levels up here, the 0.5 and the 238, I wouldn't hold my breath for it. I think we'll be lucky to even see 222-ish. Again, this is not perfectly drawn, just a rough idea. I think we'll be lucky to even see this 0.5 level reach about, again, $220-ish per share. It's possible, absolutely possible. I don't think it's unlikely, but I do think it's like, at least the way it's looking right now, it's a little bit improbable, but it is a possibility because, again, around that 220 level, don't forget, that is roughly where that 200-day moving average is. Actually, it's well above us. It's about 230 on the daily, but on the weekly, it is where it's roughly sitting, you can see, which is going to be somewhere around this pretty much 220 level right here. It's sitting at right now. So that is going to be the main level I'll be looking at to potentially come for a retest. But again, I wouldn't hold my breath. And personally, I'll be satisfied with anything just in the very, very low 200s at this point, which is like between $200 to $210, pretty much filling that earnings gap, if you will. Either next week or the week after that is what I personally am expecting right now. The one way to look at it is as follows. So first and foremost, right, we are, of course, in this descending channel, right? Massive descending channel. These 2 lines up here, the top one and the bottom red one, right? Came up, tested it, fell down, came up, fell down, right? And we kind of kept zigzagging like this over and over. And now we're pretty much right at the bottom, which is why I was telling my members, there is a possibility we still go a little bit lower early next week. There is still a possibility, right? There's something I'll mention that is that makes it a possibility as well, where, we might enter like 177, 176, something like that, give or take. That would really truly touch us at the bottom of the trend line, and I think from there we get a strong bounce. But I personally would consider this downturn to really truly be finished once we break above this kind of yellow golden line, which if it happens anytime next week will pretty much be anywhere above like 195-ish, right, give or take. Maybe if it happens early 200. But between like 195-ish to 200, I think is where you really want to break this downtrend. And I think if that happens, it does make a possibility or the case for moving up to about that 220 level to retest the 200-day moving average on the weekly or the 200-day moving average on the daily around 230, a very real possibility. And that's pretty much what I think, in my opinion, you should be looking at. These essentially two lines right here that are pretty much going to be sandwiching us, and I think will explode us back up to the top direction as we retest the breakdowns and the 200-day moving average as well on potentially one of the two timeframes, weekly or daily. So that's the main thing I'm looking at right now. Now, why did I say that there is a possibility we can come down to the trend line of around 177-ish? Other than the fact that we're literally touching the trend line, well, that's going to be this right here, right? So we have, Gary Black, of course, on Twitter, X, whatever, he's posting these things, but this is something that you should already know, where essentially what happens after such a massive sell-off, especially post earnings, where it's like pretty painful, is there's a 3-day rule. There's just a 3-day rule where, institutions or like, even traders, he says it right here somewhere. Let me see if I can find it. I think it was up here. Yeah. Isn't scientific. On Wall Street, it essentially is the length of time for portfolio managers to take time to catch their breath after being punched in the gut. Instead of buying the dip, portfolio managers tend to let things settle and think for a minute, right? The 3-day rule before the really like true buy the dip really starts, as even traders themselves are just eyeballing it and just kind of letting the dust settle, letting any potential margin calls even further settle, things like that. And then once Tesla really shows that, yes, it's not going down any further, at least nothing obvious, and it seems like it has base and the dust has settled, that's when, the momentum can finally start shifting in the opposite direction. Essentially the 3-day rule. So take that into account as well. That's also important to understand. So those are the main things I'm looking at. Now, the final thing to talk about is going to be this potential inside day candle, because we did get a pretty much perfect inside day candle today, where we traded today inside yesterday's candle, which is going to be this situation right here, often indicating signaling some consolidation. A series of inside day candles, however, indicate an imminent trend in reversal and trend reversal in technical analysis. So for instance, if let's say tomorrow on Monday, also an inside day, and let's say we pretty much dance in between 186 to pretty much 182, that would be actually bullish. And that I think will be enough for people to understand that we most likely have base here and we potentially move up even further. So that's going to be what I'll be looking at for pretty much Monday, maybe Tuesday, and see if that happens, or if we do come down to 177 first, as some people are waiting, and then we bounce from there. But that's the main stuff I am personally looking at right now, and I am eyeballing. I do think this pain will end at some point. It always does. Every time it feels like it doesn't, and every time Tesla has these pretty substantial, dramatic falls like this, it always feels like it's all over. Tesla's going to zero, and it's never going to go back up ever again. And take a guess as to what happens pretty much every single time that situation arises. It bounces back up again. Whether it bounces up like the other times and goes all the way back up to, let's say, 240, 250, that remains to be seen, of course. But at the very least, some relief rally, some bounce is to be expected. I think you're just delusional if you don't think that'll happen. It will happen at some point. It's just a matter of when, not if, right? Especially after, this earnings uncertainty is now essentially out of the way, especially if we get any good news, potential catalysts over the weekend or early next week. And we'll see if that helps propel this even further and bring some, bullish momentum back in the favor of Tesla. But all in all, that's it for this video. If you enjoyed, don't forget to hit that like button. And as usual, I will see you on Monday. Hope you have a great weekend. Hope all of you are staying sane. If it makes you feel any better, it has hurt me pretty substantially as well. This does hurt. Thankfully, I'm only holding shares. I'm not holding any bought options that you pretty much can't wait them out unless they're very far out. I'm pretty much only shares. The only options I do is selling options. But yeah, all in all, thanks so much for watching, and I'll see you on Monday. Peace.